The death of any family member is a great emotional blow. The death of a wage earner, especially the principal wage earner, adds a major financial impact. Most persons who use their earnings to support their family want a way of replacing some of the lost income if they die. They may put by some savings, but the most common way to provide such money is a life insurance contract. What else might you call life insurance? Yes. The amount spent on new automobiles in the United States each year averages $1,000 per family. Surprisingly, more than twice as much is spent for private insurance of all kinds, including an average of almost $800 per family for life insurance. Altogether, Americans pay $40 billion a year for life insurance. But many young families pay only a few dollars a month for the major wage earner's life insurance. 2/3 of the insureds are men in their 20s and 30s, and many of them can afford only $300 per year for $100,000 of term insurance, which costs less than whole life while the insured is young. What is the average annual cost of life insurance per family? Good. Death and its effects on surviving members of a family are emotionally charged subjects. This and the fact that many people know little about life insurance can lead to impulsive decisions. To make the best choice about life insurance, you need to know the differences among policies and to evaluate your family's resources and needs. In insurance, premiums are the payments you make, and value is the amount the insurance company pays upon death. If you pay $100 a year for $10,000 of life insurance, which is the premium? Right. There are two principal kinds of life insurance, term and whole life. Term insurance has lower premiums when you're young, but the premiums increase every time you renew it, and it does not build up a cash value that you can withdraw during your lifetime. Whole life builds up a cash value and has a constant premium, which starts out higher than term but eventually is lower. Term life insurance is a contract for a period, usually 5 years, to pay its value if the insured person dies. A renewable term policy allows the insured to renew at the end of each term without a physical examination, but at an increasingly higher rate. Which kind of insurance is less expensive for a 30-year-old? A man between 30 and 35, or a woman between 35 and 40, has about 2 chances per 1,000 of death each year, and would have to pay about $3 per $1,000 of term insurance. What do you think the cost per $1,000 of whole life would be? Good. Straight term policies have a fixed value and a premium which increases, usually at the end of each term. You can get a decreasing term policy for, say, 5, 10, or 20 years with a premium that remains constant, but a value that decreases each year. For which of these expenses might you get 20-year decreasing term? Correct. Term insurance is usually lower in total cost than whole life, and it is a good choice for covering expenses that will probably not last your whole life, such as a home mortgage or rearing and educating your children. But it does not build a cash value, and the premiums become very expensive as you grow old. A convertible term insurance policy permits the policyholder to convert to whole life insurance without having a physical examination. A whole life policy builds up a cash value, which you have the option of withdrawing during your lifetime or converting to a paid-up policy. So, in a way, whole life insurance forces you to save. Its premiums are constant and are higher than what you would pay for term when you're young, but lower than term when you're old. Richard and Susan Morris are 30 and have 2 children. Richard earns $20,000 a year and takes home about $17,000, so they would prefer not to pay more than $300 a year for life insurance. For that amount, Richard could get about $100,000 in 5-year renewable term insurance. About how much whole life could he get? Yes. Whole life insurance policies may be continuous premium, which means the premium remains the same until the policyholder dies or converts the policy. Limited payment whole life costs more per year, but is paid up after a specified period, say 20 or 30 years. If Richard and Susan wish to be sure that they save some money, we're not very concerned about initially higher premiums, but wish the premiums to stay the same for a lifetime, what would they buy? Right. A more expensive form of insurance that protects you against outliving your income is endowment life insurance. After some stated period, say 30 years, the insured, if still living, receives the stated value. Whole life and endowment policies have savings features whose interest returns have often been described as rather low. How much and which type of life insurance should you buy? There are reasonable guidelines. Your family's savings and other resources, such as the surviving spouse's earning potential compared to its debts, the age of the children, and special needs. What income might be thought mostly to replace lost earnings of $20,000 per year? Correct. One might wish that insurance would provide the family, for example, a widow and children, with all the money needed to live comfortably and to pay educational costs. But some compromise is usually made between such possible future benefits and present sacrifices for the cost of premiums. Suppose you're young and your primary life insurance concern is to provide at a modest cost enough money to pay off the mortgage, support and educate your young children, and provide living and possibly re-education expenses for your spouse. Then you will probably find term insurance the best buy. Insurance agents understandably wish to make good commissions. Do you think term or whole life would normally pay an agent the better commissions? That's right. As you grow older and become more concerned with saving for retirement and less concerned about higher premiums, whole life insurance may be better. You need to evaluate your life insurance coverage about every 5 years and make any necessary changes. Banks and other lenders often suggest that you buy mortgage life insurance or other kinds of credit life insurance from them for the period of installment loans. These are term policies. Do you think these policies are always bargains? Right. Years ago, many small home life insurance policies were sold by persuasive salesmen to low-income industrial workers. Collections were often made each week on paydays by assertive collectors. This kind of industrial insurance, which is costly for its benefits, is less common nowadays. Group life is a term policy often obtained by employers as a fringe benefit for their employees. Groups having similar and selected characteristics may purchase group life, which can be moderate in cost, but of course is not permanent in coverage. What is the name for a small whole life weekly payment policy? Yes. There are many other kinds of life insurance, and policies can be long and legalistic. Some important insurance terms are insured, beneficiary, settlement, and forfeiture. If Richard Morris takes out a policy and it is to be paid to his wife, who's the insured and beneficiary? Correct. It's a good idea to specify the beneficiary by name rather than by wife or children for obvious reasons. Don't forget to name a secondary beneficiary because the primary beneficiary may die before or at the same time as the insured. Settlement means the payment of the policy's value to the beneficiary when the insured dies. Some settlement options are the full amount at once, monthly payments over a stated period, and income for life. Forfeiture refers to the loss of cash value if a whole life policy is terminated before maturity. Most policies have a non-forfeiture clause which provides for cash payments or other options on termination. What is the word for instructions regarding payments to beneficiaries? Sometimes policies have a reinstatement feature, allowing for a while a paid-up policy to be reinstated to the original whole life type. What do you call a policy with a single premium consisting of the cash value of a previous policy? Yes. A policyholder may usually borrow up to 95% of the insurance policy's cash value if it has one. The interest rates on these loans are often less than are available elsewhere. Would borrowing on your policy at 8% interest to finance a new car be a wise financial move? Your life expectancy is affected by your health, and insurance companies often require a physical examination before issuing a policy. Some applicants are not insurable. There are several ways, however, to keep your insurability once it is established, even though your health may deteriorate. There are a number of features in a policy's fine print that you need to be aware of. For a policy is usually void the first 1 or 2 years if the insured commits suicide or has misstated age or sex. What is the favorable qualification for a policy called? Right. You may be told that the savings features of whole life insurance provide tax advantages, especially since the Tax Reform Act of 1976. But there may be better ways of personal savings since the 1981 Tax Act, so check carefully. Nearly all insurance is sold by either a mutual insurance company, which may pay some dividends to policyholders, or stock companies which don't. The net cost may be about the same. owning life insurance have any possible effects on your taxes? Yes. There are many insurance companies, and business is competitive. But the complex nature of life insurance makes comparing costs difficult. When you wish to buy life insurance, talk with agents from several companies to compare them. Check the financial stability of insurance companies in Best's Reports, a publication you should be able to find at your local library. Are all life insurance policies and companies alike? No, they're not. Even the biggest and best-known companies have material differences in costs, although they are quite hard to compare. Some of the best-known firms are Prudential, Metropolitan, State Farm, Massachusetts, Connecticut, New York, and Penn Mutual, Equitable, Aetna, John Hancock, and Franklin Life Insurance Company. Before you buy life insurance, stop and consider what your family's basic needs really are, and your risks and resources. Talk with some insurance agents and compare companies. Then you will be better prepared to provide for your family's financial security through life insurance.